say make money, money, make money, money, money. Make money, money, make money, money.
Welcome in to Just the Tips by the Stock Jocks. This is your host, George Boy, George the Stock Guru, as I'm also known. Bringing it to you live here with Gordo and Bruce. How are you guys doing?
Well, he's not known as George the Stock Guru to anybody except himself. He calls himself that. He's trying to
self-proclaimed.
He's like one of those people that's trying to create his own nickname. You know, it's just awkward. You're like, hey, I'm Tank. Like, okay, Tank. All right, whatever, John. I'm not calling you.
It's
Anyway.
it's like The Secret. You envision it to happen, and it will. See.
GTSG.
Exactly. So I'm just gonna keep saying it. You guys will eventually buy into it.
Yeah. Well, to answer your question, I'm wonderful. Life is wonderful. It's better than the CEO of United Health. Oh man. Sorry, it's too soon. Dear God, America has just turned on this guy. He was going to what investor conference was it? They canceled it, right? It was.
I think he was going to one of.
He was going to their investor.
Yeah, their investor conference. Yeah.
Their analyst day.
Dude, talk about like. Yeah, well, I think it was their investor conference. I don't know if it was like a full analyst day.
Somebody was telling me that like his hoodie is sold, like the shooter's hoodie is sold out. I mean,
yeah.
Like, this is the most dystopian world we live in now. It's like people are just bloodlust. They're like, oh yeah, like I had a friend saying we should definitely look for private security stocks. Like we should be buying those. Taser, I can't remember the name of the company that owns Taser brand. I should probably.
Well, they're called what? Axos or Axum or something now instead of Taser, but yes.
I mean, it's just insane that like a CEO would get hit by like somebody who was disgruntled over. Well, it seems like he was disgruntled either over like a friend or a family member who was like denied service or something. I mean, I think he put like something on the bullets, like he had inscribed one of those insurance book slogans on his bullets. And so, yeah.
The last one was dispose, which is like get rid of, right? So like he took care of the problem. I can't believe they haven't caught him yet. They have so many. They've got to know who this guy is, right? I mean, as of now, I haven't seen any news about this guy getting arrested, but like he's making cell phone calls before. They've got his picture. They knew where he stayed. Like there's just too many clues. They've got his DNA. There's too many clues.
I mean, I didn't know they had his cell phone calls. I thought he was using a burner and everything.
Maybe. I don't know.
Yeah, they had a bus. He took a bus from Atlanta. I saw there was like a lookalike contest in Brooklyn. Like for me, the broader thing here is just the total hatred of corporate, I guess the insurance industry in particular, that just sort of welled up after this. Like people are sort of like kind of saying, I mean, United. Actually, I saw a chart. I don't know if it's real, but basically it showed like the denial rate by United was just the worst out of all of its peers. And so
it has had this weird impact where like there's a lot of folks like on social media that are like sympathizing with him as opposed to the victim, which is just insane. But that's where we are.
I feel like it's sort of like it's a very populist. I mean, you would have thought maybe post-Trump that perhaps people might be more corporate. No, they're not. They're mad about the healthcare system and how bad it is. I think. So anyway, I don't know. I'm not sure what else to do with that from a stock perspective, but it certainly was I think it shook the entire, broader Wall Street, in corporate, culture. Just, this very bold assassination, right before his investor meetings. It's just in the middle of Midtown, and then he gets away. Right, that's the amazing part too. Is he's hopped on a bike and went into Central Park and disappeared. Like it's just kind of like a movie. It's like The Fugitive or something, right? Like, so anyway, I'm not sure what else to say on that. I'm not sure if there's anything relevant more on that topic. Anybody else have topics? I'm not the host. I guess George will give you back the reins. George, the stock guru, take the reins.
Well, we just jumped into it, but yeah, I was gonna make a little more small talk, Gordo, but he just pulled us into like the deep dark. So, what are you getting your kids for Christmas? There's the question. Brighten the day a little bit. Or sorry, the holidays. I won't call it Christmas.
I think he's getting him a couple shares of SMCI.
That thing just keeps going up. Gordo, you are the SMCI whisperer. You called it down, now you called it up. It's impressive.
the dozens of people that heard us make that call are very much better off. But yeah, man, what can I say? It's one of the few exciting areas of tech right now. A lot of haves and have-nots, and little super micro. It's lots of alpha there, I think. But I guess what am I getting for kids for Christmas? Oh, gosh, I have no smart ass answer for that. So yeah, just typical stuff, 3 and 4 year old stuff. But yeah, not shares of stock.
They've been good. No coal in the stockings.
I'm too soft a parent to put coal in the stockings. They probably do deserve coal. They do lots of things they're not supposed to do, being 3 and 4. But yeah.
What about you, Brucey? You got the girls, a lot of princess stuff this Christmas.
I've sent the Disney franchises so much money over the years. It's insane. I should just be like wiring them like the information to my bank account. Every year we reload on like Elsa and Moana. This year I think we might be going all in on Taylor Swift though. So I don't know. I mean,
you didn't buy the Wicked toys with the pornographic address on the back.
Oh, I saw that. No, I don't think I think they're gonna see it in a couple weeks or something. But no, I've just been like there's been all these memes created about like the Ariana Grande interviews. I don't know if you've seen those, but they're just insane. Like, I don't know what she's on or like what's going on with her. Like, she looks much different and she sounds much different, and like everything, like all these interviews, she's just like she's tweaking. It's
Has she turned into her character? Like, if you haven't seen the movie, she's like the blonde, kind of almost like a little blonde bimbo who's like, the pretty girl who's just full of herself, but almost like the blonde valley girl to some degree.
I know, and I don't think that's the vibe. It's just like she's she was already pretty thin and she lost like 40 pounds. I mean, she looks like insane right now. So we're gonna steer away from that for the kids this year. And no, we're probably just gonna reload on Disney and Taylor Swift and call it a year. Although this might be the year that I introduce them to video games. I don't know if that's
slippery slope.
A good idea or a bad idea, but it might be happening.
It's a good idea if you want them to leave you alone.
Yeah, you get more free time. But you'll pay for it later. You might save money on college.
I will say my son has started coding because of video games, so that's always what you hope the outcome is. So
your son started coding?
Yeah, he's coding.
Man.
On like Scratch, but like he won a Scratch competition at his school. He took first place.
That could be the Asian side, though. I wouldn't give yourself too much credit.
It's the Asian gene. For sure.
He's got the best of both worlds, my friend. All right. Well, should we hit the official news?
Let's hit it.
News.
All right. I won't criticize that news drop. So maybe a couple things to chat about. There's some earnings this week. So a few stocks that we've covered in the past. Rubrik reported earnings. I think it was a pretty robust quarter. The stock ended up about 18% on the day. At one point in the morning when I looked, it was up over 30%. Basically, a beat and raise quarter. Pretty strong. They came in net new. ARR was accelerating, which was a positive sign to me. I was surprised to see that, and they did it with less expense. So the stock responded very well. I'd been rallying into the quarter two as well. So pretty impressive. I will say now when you look at it, it trades at a very premium valuation. Before it was cheap. Now it's trading 11 times EV to revs. It's expected to still grow 30%, so the growth is there, but they're still far from profitable. It's losing a lot of money. So, when you look at it, it's it trades in line with like top-notch security companies, and we debated, I think, when we talked about them, were they a storage company or were they a security company? And if they're a security company, you say, okay, great, that's makes sense. I'm not sure they can drive the same kind of multiple 40 and profitability that some of those security companies do, just given their storage infrastructure and the like. And ultimately, part of their business is a commodity. So, to me, like the valuation is full at this point. But I don't know if you guys have thoughts or opinions there on the Rubrik earnings.
But two things I would say about Rubrik specifically. I mean, I think one, like the growth is very strong. I think in like this market and especially given where the broader enterprise software universe is trading, like this is the one company that might actually grow faster than 30% on the top line, which no other company in the enterprise universe is growing at today. And so I think that entitles them or gives them the ability to deserve a premium valuation in this market, like maybe sort of putting aside the fact that part of what they sell is a commodity. I think like growth at scale is really hard to find now, and growth is what drives most of the value, both in kind of the private and the public markets. The other thing I'd say is like this is like one of the best data points to come out in the last year for where the IPO market is. This company IPO'd at $5.6 billion. It's trading at $12 billion less than a year later. Like that is just a massive green light for all of the private companies really that are at scale, that can grow, that are thinking about entering the private market or the public markets. I think this is like maybe one of the best data points that we've seen in enterprise in the last, I don't know, 2 to 3 years.
Well, I will say SentinalOne also reported this week. They're growing in a similar vein, so they're expecting 31% growth. The stock went down on the news. I think people were hoping there was more of a inflection from CrowdStrike. But they trade at 7 to 8 times earnings, while Rubrik is trading at 11 times earnings. I think I would rather take the SentinalOne side of that trade, a pure play security company, much closer to profitability, and I get it for 4 less turns of revenue.
Yeah, I mean, I think SentinelOne has always historically traded under kind of the like regression line for where the high growth security stocks trade. And so I think like it's sort of always been like almost a no-brainer to invest in it if you believe in that regression line. The issue is it's never kind of crept up to that regression line, and it's always traded below. So like you're sort of betting on the market to take a new look at it or evaluate it or value it in a different way than it has historically, at least for the last 2 to 3 years. And like, man, I think that's a hard thing to do. Like the market just discounts their long-term growth, I think, like once they get to scale, whereas like they don't do that necessarily with maybe CrowdStrike, who's probably their best kind of pure play comp. So
I think part of the problem is they're not a leader, right? They're behind CrowdStrike. They're kind of the second fiddle. Whereas, you could look at Rubrik and say it's a leader in its space. CrowdStrike's a leader in its space. And that's probably some of the difference there. But yeah, it's an interesting one to, I think, watch. Yeah. At least it's one that I own a little bit of. One other stock that reported this week that we've covered, I know, Gordo, you've been buying a lot of the pants up, so that probably propped up the stock, is Lululemon. So Lulu jumped 18% on earnings this week. They reported a quarter that was, I think, better than feared, to describe it. So it wasn't a knockout quarter, but I think people were quite afraid of the trends. They had not been friendly. So what I saw was, North America still continues to struggle. It was down 2% year over year on comps. However, management was signaling that there's probably a bottom there, that they're confident they've put in the bottom. So I think that gave the market some confidence. And then they continue to knock it out of the park on China, and the rest of the world, where they're growing 20+%. China is still, mid-20s. And so that's kind of holding the growth story in there. If they can stabilize North America and then continue to grow internationally, you've got a company that's valued less than the market, that's really kind of a, historically a blue chip company. So that was another interesting one. We'll see if they can stabilize North America. That's what I'm going to continue to watch going forward here.
Yeah, I mean, I think the thing that I would say is like, there's sort of like an unknown with the China piece in terms of like if there'll be retaliatory tariffs if we end up putting tariffs.
They make very little in China, so unlikely to get hit, on what they make bringing it into the States. But yes, if they get retaliated against of what they are selling into China, that could really hurt their business. So that's certainly a risk.
Yeah, I think it's just like, I think it's a big question mark. Like the stock is still down 20% when the market's up 30%. So you're like, I mean, if you had invested at any time before this year, you're probably underwater, like very significantly. And so maybe it's a story to buy at the trough, which might be improving. But I mean, I think it's a hard one to get comfortable with kind of the like 2025 risk around tariffs or the 2025 risk around like growth in this category generally. Like it's not insulated or secular. Like it's as we talked about during the pod. I think it like there is no real moat, I would say, other than the brand itself, which can work if you're Nike, but you can miss.
Something magical to that rear end. Gordo, what's your take on the menswear? I know I saw a pretty picture of you sporting some of your wife's your pants there.
Well, I was wearing the women's wear, so I can't really comment on the menswear. I was feeling really pretty, so
I was impressed for what it's worth.
Yeah, hey, I've been working out. I've been doing a lot of time at the Y. So,
keep up with those squats.
No, yeah, this sounds like a real loser. I just have trouble seeing this Lulu kind of it's fashion, right? It's Volcom, it's Hot Topic, it's like it's the female version of that. This thing is fucked. Aloe, all the other brands are cooler. So all these results really, don't chase this loser.
I still go back to the teens. The teens like it, but yeah, no, it does give me a little bit of concern. So
the teens.
Remember the survey I shared on the Go Along. It's one of the aspirational brands.
Are these the Chinese teenagers or the American teenagers or
American teenagers? My daughter wears both. She has Lulu and she has Aloe. Probably too expensive for a 13-year-old, to be honest with you, but yeah, she's on her Christmas list is a Lululemon gift card, and I don't see Aloe on there. I'm just saying.
That's some good research.
No,
yeah.
No, William Blair does that study, right, where they survey teens, and obviously it's not, they try to make it, enough that's, statistically significant. But it is one of the top 5 aspirational brands for teens. So I take some comfort in that, but we will see. I think watching that North American line is going to be key, and then figuring out what's going to happen with the tariffs. Anything else you guys wanted to chat on before we?
No, I just recall. Oh, go ahead.
I was just going to go back to what you said, Bruce. I think there's. I'm excited about the Rubrik performance and potentially any kind of signs of an IPO actually happening pretty soon. This I think is anything positive in the market is going to make it more likely that IPOs can start to happen. So I think with the Trump administration too. Not a huge fan of everything that's good that they're going to do, but I think that it's probably going to cause some cause capital markets to be animal spirits to be released to some degree. So I think that's what I'm watching for is just some IPOs to start hitting the runway pretty soon here.
Isn't ServiceTitan coming soon? When's the date for that one?
When everyone's watching.
ServiceTitan will be interesting. I think they're less of a growth story than Rubrik was, and I think they'll actually price a down round IPO relative to their last round of private financing. The upside for the investors there is they have a ratchet in their last round of financing. In fact, the last 3 rounds of financing had ratchets in them, and so everybody will effectively be made whole. That doesn't mean they'll be able to get liquidity at that price, but they will be kind of made whole on the event. But I do think it's one of those things where they're sort of being forced into the market in some ways because of the ratchet. It has a time component to it. So it starts accruing, I think, 11% compounding if they miss the IPO window. That was 18 months after they last raised. But I think it'll be a good data point for the market to see what is a 20 to 30% grower look like that's coming public at $500 million in ARR kind of thing.
Yeah, and it definitely seems like anything is going public for the most part. I think Astrolabs and a few others are the exception, but they tend to be bigger than they were back in the go-go days of 21, right? You need to be kind of that half a billion mark, whereas before it was you hit 100, 200, let's go public.
Yeah, I know. It's even CrowdStrike was going public at that level, like just like a handful of years ago. The other one though to note though is obviously Reddit has just absolutely crushed it since
Killed
they
it.
went public as well. So like it's like we have two pretty good data points, and like Astera can be pretty volatile, but I think they're up as well. So I don't know. The class of 24 looking pretty good.
Bring them on. So yeah, I mean, there's a few interesting ones out there that if they came public, I think would definitely create some market frenzy. So come on, Databricks.
I think they're going to push that one out for a couple of years. I think like they're raising money to do a tender offer for the employees and give people maybe give themselves a chance to continue to grow into that valuation. Although it seems like they've kind of beaten raised in the private markets, which is pretty remarkable at scale. So.
Yeah. Well, we will see. You gotta hit the market while it's hot. So, shall we move? Actually, before we jump into the main event, I did want to say our disclaimer here, which is this is just opinions. This is not investment advice, and we encourage you before making the investment decisions to consult your advisors. And these are only the opinions of the hosts, and so please take them just as that. Also, please, I would encourage you to like and subscribe to our channel. As much as we have fun doing this for ourselves, we enjoy growing our audience and more people getting to hear this. So certainly appreciate that. And if you listen on Apple, give us a review. So with that, this next section is the main section of the podcast where we debate a stock. One person will take the bull side, one person will take the bear side. And I think today, Bruce, you are the bull, and we're going to be talking about UiPath. So let's get ready to rumble. Bruce, I'm going to turn it over to you. I love this template, Bruce. This is just like amazing.
UiPath is a company in the robotics process automation space. It was actually founded in 2005. I think it was founded in Romania. So the company is actually almost 20 years old. But it really started, I think, getting traction, around 10 years ago with their RPA technology. And then it ended up.
What is RPA
Robotics
stand for?
Process Automation. I'll come back to it in a second, but it went public in 2021, probably at the perfect time in some ways, and has somewhat systematically trended down since then. We were looking at the numbers a little bit earlier, and I think it started kind of in the $40 billion range in terms of market cap, and it's down to about $8 billion today, which may make it
Sounds
the
like a
perfect time
bargain.
to buy. The company, in terms of what they do, is they really help automate a lot of the back office processes that enterprises really of all sizes have. We'll talk about it a little more, but they have a lot of large customers, a lot of medium customers, and they've really been able to take things that banks do, that healthcare institutions do, and make them more automated. So, for example, if you were submitting a loan application to buy a house, there's 50 different forms you need to fill and 5,000 pieces of information. In order to automate that process for a bank, to make sure that you submitted everything, that everything's legible, that they have everything kind of put into their underwriting framework, they'll use a tool like UiPath to check all the boxes, form an email if you've missed something, resubmit that email, make sure that their process is working according to plan. And so it's really meant for some of the tedious work that folks do in the back office to alleviate them from that work and allow them to do higher value things. Other ways that it's used are, for pricing, for example, if you're going back and you're repricing your product and there's 8,000 contracts that you have to look at. And in order to do that, you'd need to take a bunch of people and have them dedicate their time to do that. You can use a product like UiPath to automate that process, to understand, where you would need to make changes, what you would need those enterprise customers to sign, and then, for them to to actually do it, you need to send them emails. You need to track those emails. You need to make sure that you've kind of framed and executed the process in the right way to prevent any sort of potential legal action or any friction in the process itself. So, as things have scaled in a lot of these different industries, often industries that have been laden with a ton of paperwork and a ton of kind of back office support, RPA technologies have come about to help solve those and make those processes more efficient. And that's what UiPath does. So where are we today? I guess, the company is at a crossroads of sorts, I would say. Obviously in the last kind of 2 years, and as we look towards the future, the advent of generative AI and kind of the speed and momentum that it's taken over the market has been really compelling for a lot of enterprises. And I think the question for investors as they think about UiPath has really been around, is this a headwind for the company, or could this potentially be a tailwind for the company? Effectively, AI has been a headwind for the company as, enterprises really of all sizes are looking for ways to use, I would say generative AI broadly, but then more specifically, I think a lot of the low-hanging fruit has been in some of these agentic solutions where you're effectively building, an agent or using an agent to do some of the low-level, back office tasks that UiPath has been known for. And so I think it's one of those things where at the worst case scenario, or the best case scenario might be there's price erosion, right? And the worst case scenario would be, I think that some of these customers move from UiPath to using, one of these generative AI solutions. And so I think it's really incumbent upon the company to turn this historical kind of headwind over the last couple of years into a tailwind. I think they've seen some early signs of that turning the corner. So they obviously are one of the biggest, enterprise companies from a RPA standpoint in the world. They have 11,000 customers. They have over 1.3 billion in ARR, and the TAM for this market continues to be really strong. I think the impetus on them is really to be able to take a lot of the momentum in the market and utilize it in a way that some companies have done more effectively. So if you look at a company like Palantir, for instance, they've been able to take, I think, the tidal wave of generative AI and use that really to stimulate and generate momentum in their sales model. I think that UiPath has not had the same kind of efficiency around their go-to-market as it relates to generative AI. But if you look kind of across their website and their public materials, they're taking a far more active approach to using generative AI in their solution. So this is something, that I think you would need to look at the company and say, this is a bet that they've made. This is something that they can execute on. And ultimately, if they're able to drive this type of scale into their customer base, it could be beneficial for the stock and for the company. So that's sort of the first point, is just the bet on AI, I think more than anything else, both kind of at the top level, which I think, everyone is probably bullish on, but then also at the company level, which I think is more of a question mark today, but it's certainly, I think, where they've been heading.
So is this a little bit of like innovators' dilemma where they, they were a leader pre-Gen AI and they kind of got stuck with their investment of, now legacy technologies and customers on that, and they haven't been able to pivot away from that fast enough, and so you're getting folks that are utilizing Gen AI are basically able to take market share?
Yeah, I mean, I think the lowest hanging fruits for generative AI are right in the middle of the fairway of what UiPath does well. And so they have to be able to solve for that effectively in like a price competitive way and a feature competitive way. I think they've been far more aggressive about that like in recent quarters. I don't know if that's where their starting place was though. So they do have to innovate, I think, faster than they have historically. In order to maintain, I think, the footprint, both in terms of pricing and in terms of customers that they may have enjoyed historically.
It was almost better when AI was harder, right, for them, because not everybody could use it so easily, right? They needed.
Yeah, I think that's part of it. It's also, I think, even I think AI has gotten so much strength in the market today that every single company at every level is looking for ways to engage it and utilize it in their enterprise. And so I think historically it was sort of thought of as sort of a nice to have. And at this point, even if you don't know what to do with it, it's a need to have for most enterprises. And if you need to have an AI solution, it almost always starts with something agentic. Like, let's do customer service better, right? Let's do the back office better. Let's do, something where we can throw an agent next to us that's like high enough impact where we get efficiencies, but not necessarily like something in the front office today. And that's exactly what UiPath's business has been historically. So it's it is definitely, I think, like a war for them to like retain the mind share that they've had historically. But, I think they need to leverage the fact that they have such a large install base, right? They have all of the buyers that are utilizing these solutions as their customers today. And so, like, it's one of those things, I think, where you can, Microsoft's probably not the best analogy here, but they embraced AI since day one, and they're using it more as like, this is an additional feature to what you're already buying. We can make this easy for you. This is the easy button to turn on, generative AI in the enterprise for every company. And so I think that's kind of the approach that they probably need to take to kind of ensure success. Or you can take kind of the Palantir approach, which is more like services led, like very specific AI for very specific enterprises. They have a different type of customer, but they get software gross margin. So it looks like a software business. And so they're growing, good margins, it equals a tripling of the stock in this market, So it's one of those things, I think, where part of it is like obviously in the raw numbers themselves, but we'll talk about it in a second. They're at kind of a trough, I would say, in terms of evaluation, both locally as you think about UiPath, but also more broadly as you think about the enterprise software market. So I think they're in a position to maybe take advantage of that, but they have to change both the narrative and the numbers.
Yeah, it's cheap. They're growing. They just guided to like 14% ARR growth, so not the fastest growing.
Yeah. Yeah, and I think so. Yeah, and maybe to even touch on the last two kind of points here. One, they still do have very, very strong metrics, especially around NDR, especially around their large customers, and they need to leverage that. NDR is coming down, I would say. Like I think it came down from 115 to 113 in the last quarter.
Remind me what NDR
net dollar
is,
retention. So this is effectively takes what your ARR is for a particular period of time, subtracts all the churn and downgrades, and then from that customer cohort, and then adds all the upgrades, and that gives you sort of what your net dollar retention looks like. So your gross dollar retention will usually be under 100%. Good gross dollar retention is kind of 90% plus. And your net dollar retention is hopefully, above 100% and hopefully like well into kind of the 110s. And what we saw in the pandemic was like more in the 120s. But here we're showing, for our listening audience, basically enterprise NDR across all software companies in the 25th percentile is 101%. It's 114% in the 75th percentile, and then in the 90th percentile. So the best companies are basically at 118% NDR. UiPath is at 113% NDR. So pretty close to being, in the top quartile, I would say, of enterprise software companies, which I think is, a testament to the technology and the fact that people are using it and the fact that they're growing. On the right-hand part of the second bullet, their $1 million plus customers are growing. They have over 300 of them. They're growing at 14%. Their 100K plus customers are growing at 13%. They have over 2,200 of them. So this is a solution that is being used by enterprises in the market. It's a question of if they can continue to grow that base, significantly in a way that allows them to both, drive top line sales as well as kind of maybe, ultimately drive sort of their bottom line metrics as well, to the extent that they can't, out execute on the growth number and end up trading more on, an earnings number. Which leads me to the last point, so this is a company, you can't afford maybe not to buy. It's cheaper than, almost every, single enterprise company in the software universe. They trade at, around 4.3 times next 12 months revenue. So, This is a bargain basement deal for folks that are looking for a company that has potential to even at the kind of median, assume that's kind of 7 times enterprise value to revenue for next month, trade up 3 multiple turns, which isn't the type of company that we have typically looked at in the past. Most of these companies have traded at kind of 7 plus, 10 plus, 13, 14, 15 plus times. This is on the other end of the spectrum. This is a very cheap stock on EV to revenue, and has the potential, if they're able to execute and do some of the things we talked about, trade significantly higher than that, even at kind of the median of all the software universe.
Is EV to revs the right way to value this? Because they are
profitable,
company,
but I don't think they're profitable to the point where you would look at kind of earnings as a metric here for valuation.
So they're barely profitable, is what you're saying. Okay. Anything else to add to your final argument?
No. This is I think an interesting name for the time. I think like generative AI is touching companies in many different ways, and this one is one where it's like going to take a direct shot. So it's one of those companies, like as we think about the next 12 to 24 months and the impacts of generative AI and some of these large language models have on the enterprise, this is a company I think to watch either on the upside or the downside. I think it's a good indicator. Like it could be like the canary in the coal mine for how a lot of enterprise names will ultimately trade, just because it's front and center for them.
Yeah, so if I can recap, it seems like they've got customers who have come to them for automation. They've already got the customer base. It's a big TAM if they can actually execute on the Gen AI transition. Their existing customers are continuing to spend more with them, so they're seeing value, and it's a cheap stock. And so that's why if you're betting on that transition, they can make it, then yeah, you should be handsomely rewarded, essentially. Did I sum that up well? All right. Gordo, you look a little, you've taken a couple punches. How are you feeling?
I'm feeling like Jake Paul. I know the fix is in.
Wait, he lost the fight, didn't he?
No, he won the fight, but it was like Mike Tyson refused to hit him.
Yeah, he just kept biting his glove, holding back. He's like, no, I can't punch him. I gotta bite it. Gotta hold it.
A great champion dethroned by a young up-and-comer. All right, so
60-year-old champion.
Well, he called you a great champion, Bruce.
All right, here we go. All right.
Look at you guys with your one slides. Oh, this is a much better format, though. No lasers going across the screen.
UiPath, a burning sensation. That's the title. I am negative. Okay, I'm going to keep it short and sweet. All right, first of all, you already alluded to this. You've already mentioned that like generative AI is kind of like hurting these guys' business. So the first thing is you're taking this market's not very big. Like this is not like an established market, that's just wide and open end. It's like a $3 billion market, and per the chart on the right, like UiPath is like over a third of it, like nearly 40%. And they're the market leader for sure, but just in general being long, basically being short generative AI is basically, you're implicitly saying, betting against, generative AI taking the RPA market or a lot of the functionality away when you've already acknowledged that this is already happening. Like, to me, that's just, that's a really bad place to be, to have such an obvious secular risk. Even if it's not as real as people think it is, it's going to weigh in the valuation. That's, I think, probably what you're seeing in that revenue multiple of around 4 times. So the second thing here is I think these guys are poised to lose share to Microsoft and other kind of just much better funded competitors. I mean, these guys have, I think, about $1 billion in the balance sheet, and they're generating a little bit of cash, in the tens of millions, but they're like a $1.6 billion company competing against Microsoft and Salesforce. They just launched Agentforce at Salesforce, ServiceNow, and then
Salesforce had some pretty impressive results on their agents, right? And the around service, right? Contact center type of use cases.
Right, absolutely. So, I just to me, I think you're kind of starting to see this already. The number of customers that these guys had in aggregate was actually down 1%. This contrasts, this is in the Q3, or sorry, the December quarter. The Microsoft Power Platform number of customers was up 40%. So, their Power Platform does, software automation as well. So, I think that, and by the way, Microsoft is, Azure is one of their big partners at UiPath. So I just feel like, competitively, there's just lots of opportunity for them to lose share to bigger, more funded folks with the ability to cross-sell a broader solution. And just in general.
So let me make sure I followed that, Gordo. So customers are down 1%, but
number of customers.
They had an NRR of 113%. So how does that work?
Well, NRR, that's just, that's really, I guess, should be NDR, right? It's what he was referring to a second ago on Bruce was, that is a number of customers. It's not the same as how much the customers so the number of customers you already had, how much their revenue grow. They grew 13%. So I guess net of that 1% number of customers, that decline, the revenue amongst existing customers grew 13%. And that kind of roughly aligns. I mean, the revenue growth was 9% overall on a reported basis. Their ARR growth was, almost 17%. So, you got various pieces of it there. So that 13% same customer growth is consistent with, it's a large part of that, ARR growth that you're seeing. Does that make sense?
Got it.
Okay.
Got it. Yeah. So your customers that are sticking around, you're not growing your customer base. In fact, you're shrinking it. But the customers that are sticking around are spending more.
Yeah, and they actually had growth. And Bruce showed like large customers are growing. So I assume there's probably some customers perhaps just going under, but some could be going to Microsoft or who knows where they're going. Just in general, I call this problem 3, but it's just. I just feel like the metrics in their last quarters are not very encouraging. They missed on their billings. They're up 4% year over year. That's the slowest growth since, the IPO. Their ARR guidance, for the coming quarter, it's a January quarter, I believe, implied around $65 million in net new ARR. That's down between 22 and 28%. For the range they gave, that's a pretty significant decline in the worst of the fiscal year. And again, you guys talked about this. The NRR was actually down 200 basis points quarter over quarter. That 130% is admirable, I guess, from a benchmarking perspective, but it is declining. So just in general, you just look at the momentum and go, okay, yeah, like I like buying. Sort of, fallen angels, things that are sort of out of favor and being contrarian, and you want to feel like there's some kind of glimmers of hope. To me, it looks like there's not in the recent numbers. It seems like, it's cheap, but you just have these big secular concerns, these competitive concerns, and just the kind of like if you just dig under the covers a little bit on the production of the business, it's just not. It doesn't look like things are turning, from my perspective. So you take all that together, and I think I'm going to take a pass on this and say that cheap for a reason. It's not a falling knife per se, but it's I think that I would wait on this one, and that's it.
All right. So we have our arguments in. The bull has spoken. The bear has spoken. Let's move to the true opinions. So who wants to go first, or do you want me as the moderator to?
Why don't you go last? I'll go. So my view is, I'm more of a bear here than I am a bull. Yeah.
What?
Shockingly, I think that this is it's a high quality company. I'd say like just their technology and their platform, but I think that growth will be very challenging in like the next 12 to 24 months as they kind of figure out a way to contend effectively with generative AI, larger enterprise solutions, next generation competitors, because they're not natively a generative AI company. And so I think that, they won't go away, but they'll languish, I would say, for the next, several months, several quarters, potentially several years. And so I think the risk to the downside or them trading sideways is just higher than the risk to the upside, maybe, or the benefit to the upside, maybe. And so from my perspective, it's just one that I would, sit on the sidelines here. I'm more bearish on kind of the near-term outlook for the company.
Are you so bearish you'd sell short, or you would just stay?
Well, I think we have to pick whether we're going to go short or long. Otherwise, it's too easy to just sit on the sideline. So, I would be a short here. I think it's going to underperform the market. Like even if they do grow incrementally, I think like there's just very little alpha in this name, like relative to the broader market and relative to their industry. So, I'm a short.
All right, Gordo. I've been told I'm going last. So you were the bear. Are you really a bear?
Yeah, I am. Like I just feel like, man, this just has. I would have to do a lot of work to convince myself that this really is not a market that's going away. I mean, like we've seen this so many times where these companies that are sort of subscale and kind of newish markets, there's lots of very bullish things written about them when they go public, and if they hit a stalling, hit a stall in the first couple of years after kind of getting out of the nest, like this is just not a very high level of revenue to be stalling at, and it just seems like the AI, specter, whether real or not, is going to weigh on the multiple, and I'm not excited about this. I think it's I would definitely feel like there's other things I could be contrarian about that are less risky.
Got it. Where do you guys think I'm going to land? I just want to see your powers of prediction here.
I think you're a cautious long. Yeah.
My value bent.
I think you're like just at your core, you're a value investor, and so you just throw everything away and look at the multiples and you say and over index on price.
All right. Well, I will share. So, I think this one is it's kind of the antithesis of like what's a really interesting question to me, which is like Gen AI in general. Like if you look at like most technology transitions, they have not favored the incumbent. And so like you've seen whether it was like mobile or the move to the cloud, most of the folks that, had, to the innovator's dilemma, right? Like they had the installed base, they couldn't move away from that. Gen AI has been interesting in that like a lot of companies, it's easier to deploy, it's easier to like throw on top of a solution you already have. And so you've seen like the Microsofts of the world, like, oh, we launched a Copilot on top of our existing platform, or Adobe, right? Like, Adobe was one that I was like, oh, Adobe's going to be disrupted super quick here, right? All of their creative suites, like you can do so many things with AI and they can just incorporate it so fast. Like it's not hard to deploy on top of existing platforms. And so in a lot of ways, like I felt like if you have that customer base, like the incumbents have been advantaged in many ways because, people already trust you. You deploy it, you roll it out, like you're going to be able to win over even the startup. So in many ways, like it's been interesting that I feel like this has not been as disruptive to incumbents so far as maybe historical transitions. With that being said, like I don't think UiPath has any demonstration that they are taking advantage of that so far, and so like I'd rather sit on the sidelines with you guys and be, more on the short side. There's nothing that's compelling here. It's a cheap valuation, but I think you have to say like, show me the proof that you guys are actually executing. So it's an execution. It's one that I'm intrigued to watch very closely now. Like any sign that they actually are doing that, like I would jump on this bandwagon right away because I think they'll be able to really monetize that customer base. But outside of that, like they just haven't proven that they're doing it yet. So I would also say stay short.
Consensus.
Wow.
So with that, this is 2 unanimouses in a row.
We're like chicks in a dorm. We're all syncing up, right, with our periods.
All right. Well, with that, let's wrap it up. Thank you for listening to another episode of Just the Tips with the Stock Jocks. And
Bears make money.
Bulls make money. Pigs they get.
Flatted.
Oink oink. All right, we out.
I need that Skrilla on the Rilla. I need that Skrilla on the Rilla.